This is the Value Investor Podcast with Tracey Reineck. All things value, all the time.
Welcome back, value investors. So today I wanted to just stick with the basics. I ran a screen that was looking for Zacks #1 ranked stocks. Of course, we want the strong buys. We want the best of the best. We're in earnings season when I'm recording this in early May 2024. And so there's a lot of changes to the Zacks rank, but we've had a couple weeks now of earnings. So a lot of the number ones are newer. So I'm glad about that because we might get some new names in here. And so I want the best of the best. So I chose the number ones. And remember, there's usually about 220 to 250 at the upper end of the Zacks #1 ranked stocks. And so they're rare. That's out of, over 4,000 companies that is in the Zacks rank. So if you got that Zacks #1 rank, you're crushing it basically. And remember, to get the #1 rank, that means the analysts are raising the earnings estimates. It doesn't mean the earnings estimates or the earnings are actually growing or anything like that, but usually that does indicate that, but not always. But it means the analysts have gotten bullish enough where either the company, beat and then raised, or they just beat on the last earnings report. And so all the analysts are going in and raising their own guidance or, estimate for the full year. So this is always full year for the Zacks rank. And it looks at recency. So it will look at the last 7 days, 30, 60 days for the rank. But a lot of these, as I said, because we're in earnings season, are going to be newer #1 ranks because it's changing a lot right now. So then I also added the value style score of A. So the style scores go A, B, D. I don't know if there's an F. Is there? There might be. Instead of the 1 through 5. So we use the letters over there, but it is like it is in school. So an A is the top, and I wanted the top for value. And what's included in the value style score is a bunch of the value fundamentals and a bunch of other things, but really the value fundamentals. So that includes, PE, price to book, things like that are included in there. But I also wanted to look for PE as a separate criteria, and because I wanted to keep it dirt cheap for this podcast. So I wanted to look at 10 and under. And I'm not sure what the value style score might do. It might look at 15 or 20 and under. So I wanted to go cheaper with 10. So I included that. And that's all I did. I just did the super basic screen. Zacks #1 rank, value style score of A, PE under 10. And I was kind of curious, how many am I going to get? Well, we know it's under 250 because that's all the number ones. So I did get 19 companies. And this was an interesting list. A lot of foreign companies made this list. They're dirt cheap, apparently. And then the home builders. We've gotten a couple of those reports in. They are still cheap. The analysts are still raising estimates again on them. A lot of them are very bullish right now. So I did include 2 of them on the list here of the 5 I picked out of the 19 companies. So let's dive right in. The first one is one I was not aware of. I don't think I've ever looked it up. See, this is what I like about the Zacks rank. You find like these hidden gems. And I've been using the Zacks rank for, 15 or 16 years now. So how could I still be getting new companies? I am, because there's just so many. And a lot of the smaller caps get kind of lost in the shuffle. And this company happens to be foreign as well. So it's like a double whammy. It's small and it's foreign. So that's why no one's paying attention to it. So what is it? It's North American Construction Group. North American Construction Group. It's like a tongue twister. I can't say it. And to be honest, when I first saw this, the ticker is N as in Nancy, O, A as in Adam, NOA. And I thought, a construction type of company, infrastructure, all that's going on. This will be fun. And then I look it up and it says oil and gas services. So I'm like, what? This is an oil play? And what it is heavy construction and mining, and they own the fleet. So they have haul trucks, shovels, and mining equipment. That's probably why it's in oil and gas services. They do it to the oil industry as well. They are Canadian, but it's North American, so they do have work all the way. They give their trucks out all the way down to Texas, they said, but all the way up to Alaska. So this is interesting. 565 million market cap. Dividend, they do have one, yielding 1.4%. PE is just 6.4. Of course, it's a Zacks number one rank, and it's got the style score of A. 1 year, these shares are up just 9.3%, so lagging a little bit in the 1 year. 5 years, they're up 79.3%. So 5 years, is that even beating? Yes, it's beating the S&P 500, which is up 70.9% in that time period. So about 8% higher than the S&P 500 there. And then what else? 1 year, it's up. I said that 9.3% over the 1 year, 5 years, 79.3. I was kind of curious. Yeah, it's off of its recent highs. That's why it's even cheaper. So it did trade as high as about $25 in March when everything was like booming. And now it's trading at 21. So it's pulled back a little bit here. And that's what we like to see. I know I do as a value investor. I do like, even if it's cheap, I still like to get it on sale. This year, earnings expected to be up 56%. So something's going on in the mining and construction industry that they're getting a lot of business right now. And then up 9.45 again for 2025. We have no earnings revisions for 2025, but one is higher for 2024 in the last 30 days. So that's where you get the Zacks number one rank. And I'm liking everything I see here. So if you're looking around for a construction and mining type of company, and you don't want to own like United Rentals or H&E Equipment Services, or you want to focus more on just this kind of mining area, then North American Construction Group, that could be the one for you. So keep that in mind. NOA is the ticker. Okay, then we're going to leap into the home builders. So KB Homes was on here, ticker K as in Kathy, B as in boy, H. And it has a PE of just 8. It's got the number one rank, obviously, Valley Style score of A. 1 year, it's up 49%. The home builders have really been on the run. But 5 years, it's trading near that 5-year high, up 149%. Remember, S&P 500 up 70.9. So almost a little over double what the S&P 500 is doing. Who knew? Boring home builders could be so good. 1 month, however, the shares are down 7.7%. People are worried about those rising mortgage rates, that it's going to slow housing demand again. And it has. It has over the last 2 years. These companies are buying down the rate, but that costs them more. So that could go to the earnings as well. So keep that in mind. If we see 8% mortgage rates again, then it could get a little dicey for some of these. People might sell out, leap out, and that could be a good time, a good buying opportunity for some of these. Also, these shares are somewhat cyclical for the home builders. And so they tend to do well in the spring into the early summer, which we're almost approaching now since we're in May 2024. And then they go nowhere or go down into the fall. And usually bottom out October, November, around there, as people, the analysts and everyone starts to get a little interested in what's going to happen in the next spring buying season. So for 2025. So then the shares start rallying a bit. And there's always, that's the hope trade that the spring will be good. And the last couple of years, it has been, even with the higher rates, it has turned out to be good. And then the shares will rally again in the spring. So keep all of this in mind. If you do buy it here in the summertime, it may go nowhere or down a bit over that period. So, again, again, just keep that in mind with any of these home builders. So 2 estimates are higher in the last 30 days for fiscal 2024 and also for fiscal 2025. 13% earnings growth for this year, 8% for next year. Now, we didn't really look for earnings growth, obviously, in the screen, right? But it's got the Zacks #1 rank, and we know the home builders have been pretty good at growing those earnings. So you are seeing all that with the Zacks #1 rank. And the analysts are still bullish. So KB Homes, did I mention the dividend? It's 1.5%. So you do get something for your troubles while you're hanging out. If you're there in the summer, hanging out in these shares. And I think they're doing a share buyback too at KB Homes. Some of these companies are, because the free cash flows are really good right now. Those gross margins are above 20, and above 20 is a bull market for the home builders. And some of them are trading near 30 on the gross margins. That is an incredible level. So that's great for earnings. And they are seeing good free cash flow. So KB Homes, headquartered in Los Angeles, it's heavily in the West. So for that reason, its average home price is a bit higher than some of the others, but they are a national builder, so they are in other locations. KB Homes, ticker KBH. The second home builder is MI Homes. It's like M as in Mary /I. MI Homes, ticker M as in Mary, HO, MHO. And this one's just as cheap, PE of 6.4, and hasn't been quite as good of a performer as KB. So 1 year, it's up 70.3%, which is better than KB Homes. But over the last month, it's actually down 15.5%. So a bigger pullback here in MI Homes. 5 years, it's crushing KB here. 5 years, it's up 296% now. Woo! Almost a 3-bagger with MI Homes if you'd bought it 5 years ago. Market cap on this one is $3.1 billion, and the market cap on KB is $4.9 billion. So a little bit bigger on KB Homes, but this is kind of like a mid-cap national home builder. No dividend, though, with MI Homes. I'm not sure if they're doing the share buyback, but keep that in mind, no dividend. We have less analysts covering this one. We only have one estimate. It is higher in just the last week. They probably did just report earnings. And it's quite significantly higher. So they're looking for 18.18 now, and the prior guidance was 16.35. And they just had a big beat, 82-cent beat for this last quarter. So now you can see why you got the big increase in 2024's earnings. Expected to be up 12% this year and just 0.2% next year. But again, just one estimate. So we're relying on that one guy or girl here for this one for MI Homes, but still liking the home builders, as I mentioned. So that's ticker M as in Mary, HO. And now we're leaving the home builders, but we're going back to the foreign companies. So this is kind of weird. We have 2 home builders and 3 foreign stocks. I didn't really plan it this way. Like I said, I did not know North American Construction Group was Canadian. And now the second company, Suzano, am I saying that right? Ticker S as in Sam, U, Z as in zebra, SUZ. They're Brazilian. And they do paper products, and they're the world's largest pulp producer. Forestry paper, huge in Latin America. And so if you're looking for something like that, Suzano could be on your short list here. This stock, I had to look because it trades with a PE of 1. How have we ever had a PE of 1? I think on some episode I did where I did PEs under 5, and I said be wary, be warned if it has a PE of 1 or even less, something else is going on. Like, how could it be that cheap? You're basically getting the earnings for free if it's that low. And who does that? Or something's going on at the company, right? But nevertheless, this one does have a P of 1, and that's because we only have one earnings estimate on it because it's foreign, and it's that person does have really high earnings estimate expected for this year. So in the last 30 days, it's jumped up with one estimate revision being higher to $10.59 from $1.65. So I'm not sure why that is. I'm not sure if they made some oil discovery or something. I don't know. But they made 217 last year. And now they're expected to make 1059. That's up 388%. So that's why you got the one. So I'm kind of disregarding that, but it's still a cheap stock, no matter how you look at it, because for next year, it is expected to decline to 667. And that's a decline of 37%. But that seems more normal, 667 from 217 last year. That's not too strange depending on what's going on. Are paper products more expensive? Are they making more money because, the commodity price is up and they're able to pass it along? I don't know. I would need to do more investigation of Suzano, but now I'm intrigued by it, right? Market cap is 14.8 billion, so it's not that small. It does pay a dividend. So Yahoo Finance has a yield of 5.1%. We have a yield of 6.3. So there might be a variable dividend in there, or it, fluctuates. It's not like a set-based dividend. And I'm not sure if it's paid quarterly or if it's like half year or even just one time. Some foreign companies only pay half year. So you get it in the summer and then in the winter for the dividend. So these are all things I did want to, check out and investigate later, but still kind of intriguing, right? And we know foreign companies are ignored a lot of times by investors and the street. I mean, why should I buy a foreign company when there's so many choices in the US where I have so much more information about them and I might even use their product or know them? Or work there, any of these things. And so it's a little harder for me to, leave the safety of that and go to invest in a foreign company that I just know much less about. And that only has like one analyst covering it. So that's why a lot of times we will find some value in the foreign stocks. And this one definitely seems to have that. So good to see. But that is Suzano, ticker SUZ, and it does look like it's come off of its recent highs as well. I didn't look up the chart on this one. Let's see. Yeah, it was trading at highs around $13, and now it's pulled back off of that, and so it's a little bit cheaper. So that even adds even more to the cheapness of the stock. And let's see, year to date. Year to date, it's only up 0.5%, and the S&P 500 is up over 7%. So it is underperforming the S&P. Over the last 5 years, it's also underperforming, up just 4.7%. So this is one of those commodity stocks, big foreign. It's giving you the big dividend, but it's kind of staying in this narrow trading range, up, down, over the last couple of years, and you want to get it when it's down. So you might want to wait on that one, but that's Suzano, ticker SUZ. And then we're going to wrap it up with one that I just talked about on one of the other shows, but it's showing up again and it is still dirt cheap. So we're including it. JD.com out of China, internet commerce. We all know what it does. It's like the Amazon of China, basically. PE is 9.2. So it has been cheaper. It is off the recent lows. So not quite as cheap. I want to say, didn't we get it at like 5 times or something crazy the last time we talked about it? But year to date, it is up 5%. Again, S&P 500 up 7%. Over the last year, though, still depressed, still down 17%. S&P 500 up 22%. And then the 5-year chart is not good either. 5 years, just 0.9% gain, because it did peak during the pandemic there in February 2021. And then it has crashed all the way down. So as value investors, we like to look at ones where I'm talking about it crashing, but this is in China. It is hard to get information out, and the consumer is pulling back in China. So a little bit of dilemmas there. It's not always as good as what we think. It reports earnings on May 16th. So you might want to tune in to see what is going on there with the Chinese consumer. A lot of restaurants reporting that it's slow. So will it be for JD? We don't know. I also was surprised to see that it does pay a decent dividend. A lot of Chinese stocks always kind of just paid this token dividend, a couple pennies. It was pretty small. But this one is 74 cents or a yield of 2.6%. And so that's some real money they have to pay out to you. And I like that with a foreign company because you can't fake that. The check has to still come to my account for the dividend. So I do like to buy foreign companies that pay me something because then I know that it doesn't guarantee it, but that there might be a little less shenanigans going on behind the scenes that I can't see. So that's JD.com, ticker JD, with that PE of 9.2, but it's got the Zacks #1 rank and it's got the style score of A. It's got growth of A on the style scores, but F on the momentum. So there is an F. Yes, I thought there was. And then what does the earnings growth look like this year? It looks bad. It's just 0.6% on the earnings growth. That's why the stock is so weak. Next year, expecting a rebound to 12%, but we'll see. All depends on that Chinese consumer, obviously. And you are making a bet on the Chinese consumer if you're buying here. So that's JD.com, ticker JD. So as you can see, some interesting stocks in this list of cheap #1s with value style scores of A, but there has to be a reason we're all ignoring it. Otherwise, it would just be, NVIDIA showing up on here with its high PE. But NVIDIA, not a value, even though it's got momentum and it's got #1 rank and all this other stuff. But these are ones being ignored. Nobody wants the home builders still, even though, the stocks have been good performers, but earnings still on the rise there, and nobody wants foreign companies. So let me recap the stocks again. There's North American Construction Group, ticker NOA. There's KB Homes on the home building, ticker K as in Kathy, B as in boy, H. Then we had MI Homes, also on home building side, ticker M as in Mary, HO, MHO. Then we had the largest pulp producer in the world, Suzano, ticker S as in Sam, U, Z as in zebra. And then we finished it up with China, ticker JD.com, ticker J as in John, D as in David. So as always, you want to be sure to subscribe to get all of our podcasts. I just did the 400th episode of The Market Edge. You can check that episode out on Zacks.com/YouTube, where Dave Bartosiak and I talked about Tesla. Tesla, is that on sale? Is that a value here, at least for its growth? It's not on a PE basis, but is this a buying opportunity in Tesla? We talked all about it. So be sure to get us somewhere. We're on Apple. We're on Spotify. You can get us on Amazon Music for the Value Investor Podcast and for the Market Edge, but get us somewhere, and I'll see you again next week with some more value stocks.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.